Good morning, and thank you for standing by for Bright Scholar's 2020 third fiscal quarter earnings conference call. At this time, all participants are in listen-only mode. After management prepared remarks, there will be a question and answer session. Today's conference is being recorded. I would now like to turn the meeting over to your host for today's conference, Ms. Ruby Yim, Investor Relations Counsel.
Thank you, operator. Good morning and good evening. Welcome to Bright Scholar's third fiscal quarter ended May 31st, 2020 earnings call. Joining me today are Mr. Jerry He, our Executive Vice Chairman, Ms. Wanmei Li, our Co-CEO, Mr. Andy Chan, our Co-CEO, and Ms. Dora Li, our Chief Financial Officer. As a reminder, today's conference call is being broadcast live via webcast. In addition, a replay will be available on our website following the call. By now, you should have received a copy of our press release that was distributed on July the 22nd, 2020, after market close Eastern Time. If you have not, it is available on the IR section of our website. Before we get started, let me remind you that today's call may contain forward-looking statements within the meaning of Section 21E of the Securities Exchange Act of 1934, as amended and as defined in the U.S. Private Securities Litigation Reform Act of 1995. These forward-looking statements include, without limitation, the company's business plans and development, which can be identified by terminology such as may, will, expect, anticipate, aim, estimate, intend, plan, believe, potential, continue, is, so, are likely to, or other similar expressions. Such statements are based upon management's current expectations and current market and operating conditions and relate to events that involve known or unknown risks, uncertainties, and other factors, all of which are difficult to predict, and many of which are beyond the company's control, which may cause the company's actual results, performance, or achievements to differ materially from those in the forward-looking statements. Further information regarding this and other risks, uncertainties, or factors is included in the company's filings with the U.S. Securities and Exchange Commission. The company does not undertake any obligation to update any forward-looking statement as a result of new information, future events, or otherwise, except as required under law. During this call, we'll be referring to GAAP and non-GAAP financial measures. We use certain non-GAAP measures as supplemental measures to review and assess our operating performance. These non-GAAP financial measures have limitations as analytical tools, and investors should not consider them in isolation or as a substitute for net income attributable to company or other consolidated statements of comprehensive income data prepared in accordance with U.S. GAAP. Please note, all numbers are in RMB, and all comparisons refer to year-over-year comparisons unless otherwise stated. With that, I'll turn the call over to our Executive Vice Chairman, Jerry He. Jerry?
Thanks, Ruby. Good morning and good evening. Welcome to Bright Scholar's third quarter fiscal 2020 earnings call. During this difficult time with the continuation and the insurgence of COVID-19 around the world, our thoughts are with those affected by this unprecedented crisis. We extend our sympathies to those who are suffering personally from the impact of the pandemic, and our deepest gratitude to those help fighting the pandemic on the front line. In the face of so many challenges, I'm incredibly proud of our teams around the globe, showing exemplary dedication in ensuring our students' education journey to be least disrupted. Let's begin our earnings report. For those who are new to our company, we have included in our earnings presentation a brief corporate introduction from slide 5 to 13, which you can download from our website. Again, all numbers are in RMB, and all comparisons refer to year over year, unless otherwise stated. I will go through the prepared remarks on behalf of the senior management team, then turn the call over to Dora to provide more details to our financials, before we take your questions. Please turn to slide 15 for the highlights of our third fiscal quarter and the 9 months performance with detailed breakdown by respective business in slide 16 and 17. Despite disruptions and the short-term impact from COVID-19 pandemic, Bright Scholar's performance during the third fiscal quarter has demonstrated our continued progress in executing our growth strategy and highlighted the resilience of our underlying business. The revenue of the quarter was RMB 739.4 million, representing a year-over-year increase of 6.7%. Our net income was RMB 68 million, which was negatively impacted by the mandatory closure of our schools, kindergartens, and learning centers. For the 9-month period, the revenue was RMB 2.714 billion, representing a year-over-year increase of 46.6%. The adjusted gross profit, adjusted operating income, adjusted EBITDA increased by 41.9%, 23.9%, and 37.3% year-over-year, respectively. We are confident in the strength of our well-positioned growth platforms, namely domestic K-12 schools, overseas schools, complementary education services, and education technology. We are building good momentum as we accelerate the execution of our multifaceted growth strategy. A brief update as follows. First, on our domestic K-12 business, the demand for our K-12 educations have continuously been strong in spite of the pandemic, as shown in slide 18. In comparison to the 9 months of last fiscal year, the average student enrollment increased by 10.6% year-over-year. Underpinning the strong demand for our K-12 education services is our consistent industry-leading academic performance, as you may refer to in slide 19. As of May 22nd, 2020, 93.6% of students in the 2020 graduating class of our international schools in China have received the offers from the top 50 institutions, including 3 from Oxford, 3 from Cambridge, 4 from the University of Chicago, and 12 from University of California, Berkeley. One of our key growth strategies is to expand our nationwide network with asset-led models through our strategic partnerships and deep collaboration with Country Garden. As of the release date, we have entered agreements with Country Garden and other partners to add 61 kindergartens and 8 schools to our school network, with a total capacity of approximately 35,500 students in China. Second, on overseas school business, as with our education service providers. The business in the third quarter was impacted by COVID-19 related school closing mandated by governments, mainly with a refund of boarding and meal fees. While the full impact of this global pandemic remains uncertain for our overseas schools, we have taken measures to minimize disruptions and also put an initiative in place to reduce costs and to improve efficiency of the business during this challenging time, and in anticipation of any potential resurgence for an extended period. Our global network of schools offers our students options to complete their study at different locations in the coming school year, along with our virtual global school. Third, our complementary education services has adapted its business strategy and taken actions to help mitigate any adverse impact on business and operation during the COVID-19 pandemic. We are pleased to report that class resumed to close to 80% for some of the business units. In addition, we have realigned and redirected resources to domestic market of which pandemic has been contained. to expand our business. We believe it's an opportune time to capitalize on post-pandemic market opportunities with new products and services for the summer. Fourth, education technology. Our new business segments are shown in slide 13. The adoption of emerging technology has profound impact on education industry. As a student-centered company, Bright Scholar has continuously been evolving to meet the changing needs of our students, as well navigated the unprecedented situation COVID-19. While these changes present challenges in the short term, we are focused on the significant opportunities presented to us by new technology and learning behavior. In the quarter, we advanced 2 strategic initiatives to capitalize on those opportunities. Early in May, we announced the acquisition of 51% equity interest in Lean Institute. Lean Institute provides high quality and outcome-focused online training service, including academic Olympia, a comprehensive selection of academic courses, as well as other world-recognized international courses. In June, we announced the launch of our virtual Future Global School with online merged offline OMO model, which will be in operation from the beginning of fiscal 21. The virtual school will deliver high-quality international curriculum through an interactive and intelligent learning management system. It creates a new blended learning experience, combining the best of classroom and online education that offers human connection between teachers and the students around the world. The expansion of our service offerings in utilizing technology to enhance access to high-quality education will further strengthen our market leadership in the face of a pandemic as we usher a new age of learning. While the pandemic is causing uncertainty and near-term impact, our revenue and profit continues to grow in the first 3 quarters, and our long-term goals and strategy remain unchanged. We expect most of our business will bounce back stronger post-COVID-19. Key secular metrics driving our business remain intact, and we remain committed to balancing operation discipline with continued investment in key strategic areas to drive long-term growth. Our prudent financial management enabled us to have the financial flexibility to continue to invest in our business and return value to our shareholders. The board of directors have declared a cash dividend of 12 cents per ADS, a 20% increase from the last fiscal year. With that note, I'll turn the call over to Dora.
Thank you, Jerry. Let's turn back to our financials. Please be reminded that all numbers are in RMB and all comparisons refer to year-over-year comparisons, unless otherwise stated. Please also refer to our earnings press release for detailed information of our comprehensive comparative financial performance on a year-over-year basis. Please turn to slide 21. Although heavily impacted by COVID-19, we still delivered solid results with top line up 6.7% to 739.4 million for the quarter and up 46.6% to 2,714.4 million for the 9 months of fiscal 2020. The change in revenue is primarily contributed by an increase in overseas schools revenue, which was acquired in July of 2019, partially offset by the decreased revenue in kindergartens due to the temporary mandatory closure of schools. Domestic K-12 schools include international schools, bilingual schools, and kindergartens was down 24.8% for the quarter and up 3.7% on a 9-month basis. As mentioned, primarily due to decrease in boarding and meal fees revenue for K1 to K12, and the tuition revenue decrease for kindergartens as a result of mandatory school closure impacted by COVID-19. For our international schools, revenue for the quarter up 7.6%, primarily due to 12.9% increase of students enrollment. On a 9-month basis, revenue was up 17.7% due to a 13.9% increase in students enrollment. Our bilingual schools, revenue for the quarter down 4.9% due to decrease in meals and boarding fees. On a 9-month basis, revenue up 10.3%, mainly attributed to 11.8% increase in students enrollment. Kindergarten, revenue for the quarter and the 9-month basis was down 96% and 26.7%, primarily due to decrease in tuition fees, meals, as a result of mandatory school closure. Overseas schools. Overseas schools is an important part of global strategy. The revenue was 210.4 million for the quarter, accounted for 28.5% of total revenue. On a 9-month basis, revenue was 766.8 million, accounted for 28.2% of total revenue. Overseas schools grew 2,204% in revenue and 2,467% in gross profit in the 9-month basis for fiscal 2020. Average number of students was 3,219 for the quarter and 3,246 for the 9-month basis. The year-over-year growth in revenue and gross profit was primarily due to the inclusion of the acquired overseas schools during the comparable period. Revenue from complementary education was down 3.2% for the quarter due to COVID-19 impact on training business, including Elan and Hangzhou Impression, as well as study tour and camp business. On a 9-month basis, revenue was up 23.1%. On slide 22, cost of revenue for the quarter was 60.5% of total revenue, compared to 54.1% in the same quarter of last fiscal year. On a 9-month basis, cost of revenue was 60.5% of total revenue, compared to 58.7% in the same period last fiscal year. The increase in cost of goods sold for the quarter and the 9 months was primarily due to the inclusion of the acquired overseas business on a comparable basis. Teaching staff cost, the primary cost contributor, accounted for 34.3% of total revenue, down from 35.3% for the quarter. On the 9-month basis, teaching staff cost was 32.8%, down from 38.4%. Our domestic K-12 schools average student-teacher ratio for the 9 months of fiscal 2020 was 9.0 compared to 8.9 in the same period of last fiscal year. On slide 23, our gross profit and margin. Gross profit was down 8.2% for the quarter and up 40.2% on the 9-month basis. And gross margin was down 6.4 percentage points to 39.5% for the quarter, and on a 9-month basis, gross margin was down 1.8 percentage points to 39.5%. Continuing on slide 24, for the third fiscal quarter, adjusted SG&A as a percentage of total revenue was up to 26.9% from 19.5% in the same quarter last fiscal year. On a 9-month basis, adjusted SG&A as percentage of total revenue was 22.8% compared to 20.9% in the same period of last fiscal year. The increase in SG&A expenses for the quarter and 9 months was primarily due to the inclusion of the acquired overseas business on a comparable basis. Adjusted SG&A as percentage of revenue for domestic K-12 schools for the quarter was up 9.4% from 8.4% in the same quarter last year, primarily due to the pre-opening expenses for the new international school planned to open in the coming school year. On a 9-month basis, adjusted SG&A as a percentage of revenue for domestic K-12 schools was 7.7%, down from 10.9% in the same period of last fiscal year. As percentage of group revenue, adjusted unallocated corporate expenses, mainly headquarter expenses for the quarter, was 5.5%, up from 3.7%. On a 9-month basis, it was 3.6%, down from 5.1%. Adjusted unallocated corporate expenses for the quarter was $40.4 million compared to $24.9 million last year due to a one-time option expenses adjustment. On a 9-month basis, it was $99 million compared to $94.8 in the same period last fiscal year. To elaborate more on the adjusted SG&A expenses, please refer to slide 25. Continuing to slide 26, adjusted EBITDA for the quarter down 25.5% to $164.5 million. Adjusted EBITDA margin was 22.2% compared to 31.9%. On a 9-month basis, adjusted EBITDA up 37.3% to $669.4 million. Adjusted EBITDA margin was 24.7% compared to 26.3%. Adjusted net income for the quarter down 70.9% to $46.6 million. Adjusted net margin was 6.3% compared to 23.1%. On a 9-month basis, adjusted net income down 7.3% to $333.6 million. Adjusted net margin was 12.3% compared to 19.4%. On slide 27, our cash and bank balance. As of May 31st, 2020, our cash and cash equivalent and restricted cash totaled 2,092 million RMB as compared to 2,433 million RMB in February 29, 2020. We also have a short-term investment of 1,966 million as of May 31st, 2020. Moving on to slide 29. Underscoring the strong confidence in the company's future prospects, the company continues to execute its second share repurchase program, and the recent insider purchase have been made from the open market by our chair lady, executive vice chairman, and independent director. Following the cash dividend of 10 cents per ADR in September 2019, the board of directors has declared the second cash dividend for 12 cents per ADS. Continuing to slide 30, we are reaffirming our revised guidance for fiscal year 2020. For the fiscal year ending August 31st, 2020, we expect our total revenue in the range of 3.37 billion and 3.47 billion, representing a growth of 31% to 35% based on existing business and without potential acquisition. We also expect average student enrollment to be between approximately 51,800 and 52,800, representing an increase of 11% to 13%. We are also in preparation to open 17 kindergartens and 1 international school for fiscal 2021. Beyond fiscal 2021, we have 7 schools and 44 kindergartens contracted for operation. Please refer to table in slides 32 and 33 for the condensed income statement. Slide 34 shows the reconciliation for SG&A, EBITDA, and the net income on a GAAP to non-GAAP results. Slide 35 shows our balance sheet and cash flow statement. For the 9 months ended May 31st, 2020, the company's capital expenditure was approximately RMB 107.3 million, up 2.1% compared to the same period of last fiscal year. And on slide 36 shows our average student enrollment and average tuition fee across our network. This concludes my financial update. Now I will turn to Jerry for his closing remarks. Jerry.
Thank you, Dora. Our transformative business model, multi-phase growth strategy, global school network, diversified portfolio, technology-enabled OMO offerings, and most importantly, our exceptional group of employees will enable us to fulfill our mission with distinction and position us well into the future. We look forward to keeping you apprised of our continued progress as we execute on our growth strategy to enhance value for both students and stakeholders. This concludes our prepared remarks, and I would like to open the call for questions. Operator, please.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touchtone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. In the interest of time, please limit yourself to 2 questions only. At this time, we will pause momentarily to assemble our roster. The first question comes from the line of Shen Yong with Morgan Stanley. Please go ahead.
Hey, good evening. Thank you for taking my question. I have 2 questions. First one is, can you give us more color about your OMO strategy? What the OMO will be applied on your school or on the supplementary services? And the second question is, because of the pandemic, a lot of institutions actually is in very difficult situation. Do you see more M&A opportunity in this currently? Thank you.
Hi, thank you for asking questions. I will turn to both of them. This is Jerry. For the OMO we are doing right now, we are actually developing a platform that we're open for business for the first quarter of fiscal 2021. So that program will combine our experience from offline schools and also offer a mix of curriculum online for students around the globe. For example, we're going to offer A-level classes, so students anywhere, if they're in China or UK or any other parts of the world, can take a class online. Of course, for those who are in China, they also have the advantage to take down the class offline in our physical schools. For students who are attending to our UK school, for example, because of the pandemic, if they cannot go back to the UK, they have the option to take some classes online with their teachers in UK, but also they can do sports and other things offline in our physical schools. We will start with A-level and English tutoring as well, but we intend to have a more broad selection of curriculum down the road, including AP curriculum as well. So you also asked about the complementary education. So because of the pandemic, we already moved some of those online already. For example, the English tutoring, we already moved online. Most of the students are taking class online during the closure of the learning centers. But the platform we are developing are more sophisticated than the tutor center would require, because the learning management is interactive. So they actually can keep track of the students' learning records across the entire school year or over the number of school years. That's for the OMO. And also, you're absolutely right. This pandemic presents a lot of opportunities for acquisition, because many of the other businesses are suffering. Many of them actually in the brink of closing down. We have been contacted by a number of organizations that are experiencing financial difficulties. So without help, they're probably going to go to some kind of closure or bankruptcy process. We are actively looking into some of those opportunities, but we believe the best opportunity to take action would be the next 6 or a year, not right now. And the valuation would come down significantly, of course.
Understand. Thank you very much. So just a follow-up about the M&A opportunity. Do you see more opportunity in the supplementary education service side, or you mean the schools?
Actually, both. I'll give you maybe some color. If you look at what's for overseas business in the UK and the US, for example, many of the private schools, because of the closure, they don't have a strong balance sheet as we do. As Dora mentioned, with this cash and cash equivalent or next to cash is a short-term investment. We have almost 4 billion RMB, which is somewhere about 570 or 80 million US dollars. So we're going to be fine to go through the pandemic without any problem. But many of them don't have a balance sheet like that. They're literally without income. They're gonna go down. So they're asking for help. Those schools, K-12 schools, can be bought at I would say compared to last year, maybe half the price in some cases, or even less. So we once we are on a fair footing, because our OC business also impacted, we are taking the opportunity to make it more efficient and streamline our business. But once we go through this, because we're still in the pandemic right now, but once we go through this, we are on very strong footing. Then I think that's the time to take up some opportunities overseas. In China, particularly for K-12 schools, there are also some opportunities. The valuation, as you mentioned, came down significantly compared to, let's say, the same time last year. But China, as you know, has reasonably controlled the pandemic. So I think most likely, other maybe some particular areas or cities, most of the country is going back to normal for this coming school year. So there would be some opportunities. The schools are doing fine, as you know. Even though students may not go back to school for boarding the meals, but they continue to enroll either online or offline for the schools. So the school business is doing fine. So there are some opportunities to K-12 schools there as well. But there are huge opportunities for complementary part of it, because many of the if I have to estimate, we don't have the statistics, but we have witnessed a lot of them, potentially, I would say maybe like half of them, really experiencing problems. And then we, of course, have seen some opportunities came to us, at a very attractive valuation, relative to the normal situation without the pandemic.
Thank you very much. That's very helpful.
Thank you.
The next question is from the line of Christine Cho with Goldman Sachs. Please go ahead.
Yes. Sure. Thank you, Jerry and Dora. I have 2 quick questions. So one is, I know the situation remains quite fluid, but do you have a sense of kind of what you're expecting for the overseas schools in the next few quarters? And secondly, I know you're preparing for the opening of BEDU College in Guangzhou, and I was wondering how the preparations are going for the opening in September. Thank you.
Sure. Again, this is Jerry. For overseas schools, we have 7 schools in the UK and 1 school in the US. The 7 schools in the UK, there are 2 buckets. 3 of them are independent schools. Most of the students are local students. When I say local, I mean students from UK. So there are less impact, just like any local schools. In most, they maybe stay at home, but it's still taking classes, okay, at the school. Of course, just like the school we have in China, you would not be able to charge them on boarding and the meals, but the tuition is still there. And I think relative to the US, UK has done a better job in terms of controlling the pandemic. We are looking at, I just got an update last week, we're looking at the entire country has maybe 300 to 400 new cases a day, and also by clusters. So, of course, I don't know that for sure, but most likely the school going to back to be opened in the fall for the schools. So the independent schools, again, are schools taking most students from UK, I think they are going to be fine. But there are 4 schools that take most students, actually international students. Depends on where the students are. It's hard to say they're going to come back. I think there are a percentage of those students would not go back to the UK for school. But for those schools, we have somewhere between 20 to 40% of students coming from China. If they are not going back to the UK, they can remain registered and continue the study in one of our campus in China. So we would not lose those students, but if somebody come from, let's say, Brazil or Russia or Vietnam, we don't have exact information on whether or not they would come back or not. Of course, we have some commitment already, but given the situation in UK is still unclear, we don't know for sure yet. But we would expect there would be some losses of students for the coming quarter. But relative to other to our competitors, many of them actually are shutting down. We are in a much better position because one, we have our China campus to support the students from China, and 2, we have virtual schools can support the students, and we also have other programs for the students as well. The schools in the U.S. is a little bit troubling. It's in Massachusetts. Relatively speaking, is also doing a better job than other states in the U.S. But it really depends on, what the actions are going to take from the U.S. government and local government, whether or not that school is going to open or not, or the students from other countries will back to the U.S. Remain again uncertain at this point of time. We do expect some students will come back, depending on where they are. For example, maybe in Brazil, actually the situation is even worse than what it is in Massachusetts. Maybe they would come back. Most of the Chinese students may decide to go to schools in to our China campus or do that online. But regardless, I would think most of the students will continue to study. Maybe more than half, at least half of them were doing it online. But some of the students may be lost. But I would think as the situation become more clear, we would have a better idea of where things are going. But either way, we are prepared for resurgence of the COVID-19 and prepared to take care of the students when they come to our campus. We have sent our parents posted us how we take actions to protect our students. We send out more than 50 pages of kind of a procedure outline everything from the point that the students get off the airplane and the student and what happens if what kind of tests we have to go through to make sure that we take care of students. We launched a campaign called We Care that's specifically for that. For Fetch College Guangzhou, we are select to open that in September for sure. We are in the final inning of recruiting the students and of course a push for the opening. That's a definitive opening in September.
Okay, thank you. That's clear.
Again, if you have a question, please press star then 1. Once again, if you have a question, please press star then 1. This concludes our question and answer session. I would like to turn the conference over to Jerry He for any closing remarks. Thank you.
Thank you. Thank you very much for joining this conference call. Please feel free to contact us if you have any further questions. We wish everybody a good day and stay healthy.
The conference has now concluded. Thank you for attending today's presentation. You may now disconnect.